The double top chart pattern is a popular technical analysis tool used by traders to identify potential trend reversals. The pattern typically forms after a sustained uptrend and consists of two consecutive peaks at approximately the same price level, separated by a trough. The double top chart pattern indicates that the bulls have failed to push the price higher, and that the bears are gaining control. In this video, we will discuss how to trade the double top chart pattern. Identifying the double top chart pattern. Before we can trade the double top chart pattern, we need to know how to identify it. The pattern consists of two consecutive peaks that are roughly the same height, with a trough in between. The trough should be lower than the peaks, and the pattern should be preceded by an uptrend. Once the second peak is formed, traders will look for a break below the trough, which signals a potential reversal of the trend. Trading the double top chart pattern. Once you have identified the double top chart pattern, there are a few ways to trade it. The most common way is to wait for a break below the trough, which signals a potential reversal of the trend. Traders will typically enter a short position once the price breaks below the trough, with a stop loss above the second peak. The profit target for the trade is typically set at the height of the pattern, measured from the trough to the top of the second peak. Another way to trade the double top chart pattern is to wait for a retest of the second peak. Once the price breaks below the trough, it may retest the second peak before continuing its downward trend. Traders can enter a short position once the price fails to break above the second peak on the retest. The stop loss for this trade should also be placed above the second peak, with the profit target set at the height of the pattern. It is important to note that the double top chart pattern is not a guaranteed signal of a trend reversal. Traders should always use proper risk management techniques, such as stop losses, to manage their trades. Additionally, traders should always look for confirmation from other technical indicators, such as volume or momentum indicators, before entering a trade. Conclusion. The double top chart pattern is a popular technical analysis tool used by traders to identify potential trend reversals. The pattern consists of two consecutive peaks at approximately the same price level, separated by a trough. Traders can trade the pattern by waiting for a break below the trough, or by waiting for a retest of the second peak. It is important to use proper risk management techniques and to look for confirmation from other technical indicators before entering a trade.